Hello, all of you. Here we are beginning with the next topic, that is restructuring in case of the companies. And this is the hi-fi name of all the advanced level problems for your capital gain chapter. So very nice. Some concepts are there. And what is the tax impact? Because other all impact you are seeing. Now, before I start this, there is a query for return of income. I want to clear just 2 minutes and then we will start. This is a very important question asked so many times in exam, that when you file your return, if there are list of items which are not there in your return, then the return is treated as defective under section 139(9). 139 subsection 9. Now in that one section says, if you file your return without paying self-assessment tax, okay, thoda sa, I have paid 80,000 tax, my tax is 85,000, 5,000, okay, we will see what is to be done now later. Dekh lenge. Like this, in that case, if you file your return without paying the self-assessment tax or 234 ABC interest, then the return will be treated as defective return. AO will return back the case, he will intimate the SSE, and 15 days time is given to the SSE to rectify the mistake for defective return. If done, then the return is rectified and processed. If not, then the return is cancelled. Okay. So this is all your procedure for the defective return. Please read return of income defective return 139(9) section. And if you have any doubt, you can ask me again. Okay. Right. Yeah, some of the books are saying that, but it is not true. You're right. Some books, they say that if the return is filed without payment of the self-assessment tax, then it is not treated as defective, but that's not right. For sure, if you file your return without paying the self-assessment tax and 234 ABC interest, also return is treated as defective, for sure. Okay, right. Now, yes, it is treated as defective practically also, and books also. I think earlier it might be there. Just can you please send me the picture of where which scanner old might be? So there, if you have seen, or some answers they have not changed. Even some of the books, yesterday we completed appeals and revisions. Some of the books are saying that revision orders can be done for 143(1) intimation also. That's not right. 143(1) may, if there is a mistake routine, it is corrected in 154. Why directly they will go for the revision orders? So these some conflicts will be there. Don't worry about that minuteness in exam. This is for sure. Still, if you have doubts, send me. Always I'm there to clear your doubt. But just one thing is, give me some time. Okay, because inter also classes are happening. This topic is completed last week in CM Inter, what I'm going to teach you today. Okay, pay attention now. What exactly we are going to discuss, I will share it with all of you. Today my screen sharing, yeah. Now see, what is happening is, in this topic mind map I'm preparing, what we are going to do, dear students. So very quickly, you all have the material. Keep your calculators ready. Nice problems we are going to do. Now this chapter, which is also called as business restructuring. When we change business restructuring, it is like the renovation of your house, or it is advanced capital gain. All the topics, what we are going to do. The first topic here is amalgamation. When the companies merge, what is the amalgamation scheme? How to calculate the purchase consideration? How will you close the books of the transferor and transferee and all that you study in accounts and FR? But related to this, what is the impact in income tax? What about the shareholders? What about the company which is getting closed? They have loss which is for 2 years. Now remaining 6 years, will it be given to the new company, and so on? So the taxation part of amalgamation, the taxation part of the demerger, we are going to discuss here. Same way, too much in is now that private companies are converted into LLP. Your sole proprietorship companies are converted into partnership firm or into company or into LLP. Then what are the tax effect? If the private company is converted, this is hot favorite. Then all the directors will become the partners, same share, same reserve, same all that conditions are satisfied. What is going to be the tax effect? One thing which I want to start today, because weightage wise this is most important. Never an exam comes without a problem on slum sale for 7 to 8 marks. Slum sale, so very important topic here. Then in capital gain we have a concept called deemed dividend. Deemed dividend is a concept taught to you all, dear students, in interlevel only in income from other sources. But now related to deemed dividend, there's a concept in capital gain also, that if company is going into liquidation and they have accumulated profits, isn't it like dividend given to shareholders? Answer is yes. Okay. And then we have by and deemed dividend concept वैसे भी important है. You all know or not? CDT, DDT is gone now. 115O is not there. All the dividend is taxable in the hands of shareholders with very limited deduction under section 80M. So that deduction also I will cover with the deemed dividend only. And the last part we will do it, very beautiful small topic, is buyback of shares. What is the tax impact for the company, for the shareholders when you purchase your own shares from the market? So these are all the things we are going to cover up in this chapter. And from this, either MCQs can be asked or work out the problem. There is no theory question or case laws. So absolutely a different way of studying than what we did in appeals and revisions. There literally 17 question answers are printed because you need to write that language. Here you need to work out the problem. So be ready with your calculators. The first thing, very quick, very simple, but very scoring. Are you clear with the names? Actually, amalgamation is one of my favorite topic in accounts also. How one company is taken over by another. There are 4 methods of purchase consideration and how goodwill is adjusted and intrinsic value. It's all beautiful. But that is what they do in books. What about income tax? When the companies are splitting, how they are paying the capital gain. So this is a very practical and very important topic with lot of weightage. Chalo. Let us talk everything about slum sale now. Now, you know what is slum sale? It is covered up under section 50B in capital gains. Slum, lump, so section 50B. Next to it is standing iska chota bhai jiska naam hai 50C. Anyone in the class, what is 50C? Few sections, whether you are in intern or final, you are a direct tax student, you should know. ऐसे 50C ना neon sign की तरह चमकता है ऐसे. हाँ? 50C is when you need to check the stamp duty value when you transfer immovable property. Stamp duty value or actual sale consideration, whichever is higher, and valuation officer and all that. Okay. I made a separate video also for the stamp duty value. If you want, you can check that. Right now, what is slum sale? First of all, it's a scheme. Nothing to write down. All this is printed in your material. I'm just giving a mind map. First of all, it's a scheme, dear students, and this scheme is optional. If you want, go for this. Otherwise, pay the capital gain in routine. It says, suppose if I have transferred to you, dear students, my running business, my fixed assets, my current assets, my stock, my furniture, my projector, my laptop, my liabilities, then for all this, you have paid me sale consideration 50 lakhs. Now for me, it's a transfer of assets. So I need to split 50 lakhs. Okay, in 50 lakhs, how much is the sale consideration for furniture? How much is plant and machinery, which is a part of block of asset? How much did you pay me for goodwill? How much did you pay me for my stock of books or my datas, and like this? We can do that with the help of the certified values. That is one way out. And then capital gain should be calculated individually. Another way is, because my whole business is taken, all my assets and liabilities from school मतलब 11th class से हम लोग पढ़ते आ रहे हैं, asset minus liabilities is capital. So you have taken my assets for 10 rupees, you have taken my liabilities for 2 rupees. Against my 8 rupees capital which you should pay me, you have given me 50 rupees. Simple. So from the sale consideration, instead of deducting cost of each and every asset, can I deduct net worth? What is net worth? Capital of the company, owner's capital, proprietary fund. Net worth includes share capital, equity plus preference both, and reserves and surplus. Okay, we are not going into ratios and all, but from the sale consideration, if I deduct the net worth, whatever gain is coming, that will be my profit. Bas, itna simple it is. Slump sale. What they are saying? Sale consideration. 1 second. Sale consideration minus the net worth. This is your capital gain. Now, immediate doubt in your minds, dear students, ma'am, this will be short term or long term. So whatever assets you have transferred, so many assets, 1, 2, 3, 4, 5, 6. Any one of the asset transferred is long term, then it will be long term capital gain. Otherwise, short term capital gain. I repeat, I have transferred my whole business to you, furniture, plant and machinery, projector, all. Out of this, anyone is held by me for more than one, say long term. Long term, that age you all know, above 2 years for other assets, for building and all, 2 years for shares and all, listed 1 year and so on. Holding period is long term, then it's long term capital gain. Okay. Now, ma'am, if it is long term capital gain, will indexation come? Answer is no. No indexation. Arey, what indexation? You are doing sale consideration minus the net worth and long term capital gain. And what you will take net worth? This you all should know. If later you want, I'll share the screen and you write. First you understand. When I'm taking net worth, all my assets which are depreciable, all my assets, 1 second, some files are opening up by mistake, so I need to close. Yeah, all the assets which are depreciable, you should take it at WDV. All the assets which are non-depreciable, like land, you should take it at the book value, ignoring revaluation. Many chapters we have seen, dear students, revaluation is of no importance in income tax. What is actually revaluation? My land in books is 10 lakhs. I feel if I sell this, no, I will be able to sell it at 13 lakhs. Land account debit to revaluation reserve. Is it your actual profit? No. That's why in MAT also we remove the revaluation reserve, if any credited in the P&L account. So depreciable assets, you take it at WDV. Non-depreciable assets, you take it at book value, ignoring the revaluation. And goodwill, you need to depreciate only till 19 and 20. After that, goodwill is not allowed to be depreciated from 1st April 21. So even if I have given you goodwill and it is there in my books, then I will take. But it is to be taken at the value of 19 and 20, WDV or depreciated value as per 1920. Then all my current assets at the book value only. So this is my total assets minus my total liabilities. Liabilities they'll give in the book, current liabilities, long-term debentures and all. This gives you the net worth. This gives you the net worth. Any doubt? Was my speed more or clear? If you can respond. And please, this is not at all theory. This is the concept. When something is there in exam which is time consuming, like math problem takes time to solve. 10 to 12 minutes. If you see slum sale, don't leave it in the choice. What problems we are doing, no, exactly same problem with different values you will get. I'm very sure. So slum sale is scoring. So take the sale consideration, net worth long. Acha. In sale consideration, there is an amendment here from this year, very small amendment. In sale consideration, when you get the value of all your assets and liabilities and all, in that case, the net worth method, you will take all book value and all, but in the sale consideration will be the fair market value of all assets. Ma'am, how do we get the fair market value? Arm's length price, property, jewelry, whatever it is. So sale consideration, you have to check the fair market value of the assets. Clear? So this is all the explanation for the slum sale. Now I'm reading out from the material. 1 second. Huh? And then you check it. If you have any doubts, you ask me. Yeah, here we go. Check. I said we are going to cover amalgamation, demerger and all, but tomorrow, amalgamation and all just points I'll give and I'll make you work out the problem. Right now, today, I feel the most important part of this is slum sale. I'm on page number 8, dear students. Yeah, I will repeat the amendment, and it says that in sale consideration, you have to take the actual sale consideration or the fair market value of the assets given. Okay. So not the actual, if this fair market value is more, you will take the fair market value. For that, valuation rules are there under section 111. But I didn't feel those are much mentioned in your book and they will ask you. Still, if it is required, we'll see. Abhi, just this much is amendment. I'll make you write at the end, don't worry. Let us first concentrate on solving the problem. Sure, I'll give. Slum sale means transfer of one or more undertaking as a result of lump sum without values being assigned to individual assets and liabilities. Any profit from slum sale in previous year shall be charged to income tax, and if capital gain being one or more undertaking transferred is owned for more than 36 months, whole will be long term, otherwise it will be short term. Net worth of the undertaking shall be deemed to be the cost of acquisition, everything. And most important is no indexation benefit in the slum sale, even if it is long term. Net worth is aggregate of total assets minus reduced by total liabilities. Assets, depreciable assets at the WDV, other assets at the book value. Any change in asset on account of revaluations, just ignore it. And you need a report of a chartered accountant. And this method is optional. If you don't want to go for slum sale, no problem. Go and pay your regular tax as you wish. ठीक है? एक एक को अलग करके जैसे regular tax you want to pay ना, do that. चलो. We will solve one or two problems here right now. Sixth problem in the class now for slum sale. 1 to 5 are amalgamation and demerger. Tomorrow we will do. Mr. A is the proprietor of Akash Limited and he transferred on 1st April 2020 his unit 1 by way of slum sale for total consideration of 25 lakhs. Okay, this should be 21. He transferred it on 21. However, we do the correction for dates every time this is changing. Now, expenses are given from the total sale consideration, that is 28,000. Now his balance sheet of March 21 is given to you. Okay, which unit is transferred? Unit 2, building, machinery, data, other assets. And in liabilities, unit 1 and 2 are given. Like unit 1 say related, you have revaluation reserve. Bank loan 70% is unit 1. So though they have given total, you have to take splitted what is important for unit 1 because unit 1 is transferred in slum sale. And creditors. Revaluation is created by revising upward value of unit 1. Which asset you have revalued? Building. So building is 12 lakhs, but in that revaluation reserve is 3 lakh. So how much we will take building for the net worth? 9 lakhs. Now, no individual value of asset is considered. Other assets of the unit 1, ye re, other assets, 150. Includes patent acquired on 1st July 2021 for 50,000, on which depreciation has not been charged. This you make it 2020. Last year you have acquired a patent of 50,000. What's the rate of depreciation on patent? It's an intangible asset, patent copyrights. So 25% WDV depreciation you should have charged, but they didn't charge any depreciation. And I told you in slum sale, if it is a depreciable asset, you have to take the WDV. Okay? So now let us compute the capital gain for 21. Change the date, please. There's a mistake. Reading the problem and interpretation is clear. Then let us go in notebook and solve it in 5 minutes. That easy this problem is. Concept you all got for business restructuring and all. Chalo, let us solve it. Problem number 6. Computation of capital gain due to slum sale. Section 50B. Capital gain due to slum sale. Section 50B. Let us take it up. Let us start first. Which asset I will take? Building. Okay, first, oh sorry, I missed out. I should have written sale consideration and all. Now by mistake I wrote this. या फिर change कर देते. First let us calculate computation we have written, no? So first always the computation of capital gain will start with sale consideration. Sale consideration. Sale consideration is given to you how much? 25 lakhs. Minus expenses, 28,000. Net sale consideration, 24 lakh. Take sale consideration as per books, dear students. As you said, rule hai, lekin rule is not applicable. It's not there in your study material. So why unnecessarily we want to learn extra? There are rules to calculate the sale consideration. Like you have 50C for stamp duty and all. There are rules to calculate the sale consideration for slum sale, but they are not there in your study material and syllabus. So I don't want to teach it right now. Net, but if they give the fair market value, you have to take the fair market value. That's the only amendment, small one. Net sale consideration minus net worth will give you the capital gain. So here your computation is over. Let us now make working note 1. Computation of net worth. For computation of net worth, let us start with assets. In assets, the first asset is building. First asset is building, which they have given for 12 lakhs. But 3 lakh is revaluation reserve. Ignore it. 3 lakh is revaluation reserve. Ignore it. building. Next is machinery, 3 lakh. Next is data, stock. All this you will take it at the book value. Stock nahi hai, I'm just saying if it is there. Other assets, read the adjustment number C, is 150. But in that 50,000 are patent on which you have not charged depreciation. And they clearly said, if it is depreciable asset, you have to take the patent. Depreciated value of patent. So other assets, I want to repeat, are 1,50,000. In that C, it says 50,000 is patent which you have purchased last year, but you have not depreciated. So depreciate and take. Patent ka value we will calculate in working note 2, and I will add it, and I will get total assets. A, I will call it. Total assets, A. Now, total liabilities. Is my speed fine? You all are able to write with me? 1 second. Huh? Total liabilities. All right. Let us read one by one. Owner's capital ho gaya. Revaluation reserve done. Let us take bank loan. How much is bank loan? 2 lakh into 70%. 2 lakh ka 70% is how much? 140. Next you have creditors, 150. Why I'm taking 70% and 25%? Because I want to calculate the net worth. Write this. I'll scroll up and again explain. Total liabilities, keep your one hand on the notes. Bank loan out of 2 lakh, only 70% belongs to unit 1. As a teacher, I can give the left hand side printed, but then in exams, little bit you should understand all these language. So 2 lakh 70%. And creditors are 150. Out of that only 25%. So 37,500. ठीक है? Clear to all of you? Now, I'm just scrolling up. Check, and if you have a doubt, ask me. Dekho. Building is 12 lakh minus 3 lakh revaluation reserve. Ignore. Machinery, book value, depreciable value. Debtors, 1 lakh. Stock and cash is not there. Otherwise, take it at the book value. Other assets, 150 includes 50,000 patent, which you miss depreciating. So now we will take the patents ka WDV value. But other assets, to other than 50, to as it is, you take, no? Patents, we will calculate the value. Usha Shri, now is this clear or not? Yahan tak ho gaya likhna. And total liabilities. Just do the total of liabilities. Total of liabilities is 177,500. Okay. And now that I call it as B. So net worth is A minus B. Total assets minus total liabilities. We can't calculate now because now we are going in working note 3, and that is patents WDV, which we want to calculate. Patents WDV, which we want to calculate. Chalo. What did they say for patents? Patents are say acquired in 1st July 2020. For 50,000, you need to depreciate at 25%, 12,500. So what is the value as on 1st April 2021? 37,500. Okay. And then 1st April 21, so you transferred it. There are expenses also that we have deducted. He transferred the unit on 1st April 21. And let us say this is acquired in July 2020. If this is acquired in 2019, to ek saal aur lenge. It has to be WDV basis. So you have to take WDV depreciation for the 1 year. So next year the depreciation will be on 37,500. I am not taking 1 more year's depreciation because it was acquired in July 20, I said, and depreciated and 1st April 21, so this is sold off. So what is the value of patent I should take here? 37,500. 37,500. Now you all calculate, please. Total of assets kitna aa raha hai, bolo? ₹14,37,500. Yes, very good. Minus 1,77,500 liability. 12,60,000. 12,60,000 is the value net worth. And this 12,60,000 working note 1 answer, I will put it here. 1260 reference, please put working note 1. From sale consideration, always deduct the expense. From net sale consideration minus the net worth, you are getting 12,12,000 as the capital gain. And they didn't say anything that these assets were held for more or, so we are just taking it as long-term capital gain. Generally, if one of the asset is also held for more than one, they will say in exam that this unit was held from 2017 or 2017 to 21, more than 2 years. It is long-term. 7 marks scoring problem and not more than 7 minutes in exam. Take a pause because we dived into calculation. Of calculation, you all have calculator. I hope silly but important thing, use the same calculator which you are going to use for final exam. And is everyone knowing how to use m plus m minus or not? And if yes ho gaya, तो एक बार पूरा scroll करो. Scroll the presentation and flow of 8 marks problem. Okay, check it. Sale consideration minus the expenses, net sale consideration minus net worth, capital gain is over. It should look very compact and beautiful. Next, working note, we have calculated the net worth. In that also somewhere we face trouble with the patent. Patent were taken at original cost. We should take it at WDV. If they would say that patent were acquired in 2019, depreciated for 2 years on WDV basis. And then deduct the liabilities. Here they have given bank loan, dear students. They can give you debentures also. Some students are not clear. Should we deduct debentures or not? Then let me tell you, only net worth is equity, preference, and reserves. So if debentures are there, that also you deduct. Okay, next is, ma'am, mostly which rate of depreciation they to be remembered? Good question. Dear students, generally you should know all the rates of depreciation, but 4 to 5 rates important. If you want, I can make you right now. It will just take 2 minutes. Normally, the depreciation for plant and machinery is 15%, including your vehicles and equipments, electronics and all. Okay. Furniture and building are always 10%. General rates I'm saying, which are asked in exam. Goodwill is non-depreciable, no depreciation. Now, and your laptop and computers and books and all that are depreciated at 40%. List I have sent you, dear students, in the business head PDF also. One page list is there, just scroll it. But as you wanted important, I'm giving it to all of you here. Plant and machinery, furniture, goodwill, non-depreciable. इसको बिल्कुल याद करो, ये कहीं ना कहीं आएगा. Goodwill is non-depreciable from 2020. So before that, you have to keep that WDV. And even if you sell it in 25, what was the WDV as on 1/4/20 that you have to deduct? Laptop, computer, highest rate of the depreciation is now 40%. And intangibles, copyrights, patents, trademarks, all 25%. Is this helpful? And I gave 5 things. You read the list. If you will something more, tick, 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 write it down. Anyone else is having any doubt in this question? What is the amendment? Let me tell you again. Here, directly I have taken, dear students, the sale consideration as 25 lakhs. But there is rule 11 UAE, where they said that sale consideration can be decided by the valuation rules, wherein you get the fair market value of the asset. I gave you so many asset lump sum, my furniture, my projector, my camera, my books, my assets, my plant and machinery. So it's possible to derive the fair market value of each and every asset individually with the help of valuation rules, but they are not required for this January 23 exam for sure. If needed, I will definitely cover it up. I'm actually waiting for that, before the exam, they give most important those mock test papers and pattern and all. In that, if we feel, surely I'll take one extra class for that. It's simple and we'll do it. All right. Is the mind mapping clear for slum sale? Sale consideration minus expense, net sale consideration minus net worth. Capital gain is long term if any one of the asset, the age is long term, the gain is long term. If not, then everything is short term. How to calculate net worth? All the non-depreciable asset book value, ignore revaluation. All depreciable asset, how? All depreciable asset, how you will take WDV as per the block of asset method, and remaining all the other assets at the book value. Liabilities all at the book value. Clear? Right. Let us do one more question related to slum sale. Check it on the screen. If they give figures in thousands, you solve it in 1,000. Here they have given in lakhs, you take it in lakhs. No need for you to write all the zeros. Chalo. Star Enterprises has transferred its unit. This is from the scanner only. Earlier exam they have asked. Unit N to A Limited by way of slum sale on January 23. Okay? Right. Acha, 1 second before I go to the next one. Patent was acquired in July and what did I say? The unit was transferred. So I hope one important point you remember, that suppose the year starts from April 21 and now this unit is transferred in January 23. 1 second. January 23. Now you tell me, will you take this January 23 में अगर unit transfer हो रहे हैं, तो in the year of transfer, do you take depreciation? Answer is no. Ma'am, but we have almost used like for 10 months, January 22, they have transferred. So April to January, so you have used. Please remember, in the year of transfer, there is no depreciation. That's something very basic. Okay. If any asset is held for less than 1 year, no, it is not depreciated. Because in the year of sale, you don't depreciate. So you take the cost only. Okay, right. Chalo. Let us take now this part. How many units are there? 3 units. But which unit is transferred? Unit N. So fixed assets of unit N are given. Other assets of unit N are given. Liabilities of N are given and accumulated balance. Now, slum sale consideration is 930 lakhs. Fixed assets of unit N includes land, which was purchased as 110 lakhs and was revalued at 140 lakhs. Okay. So this fixed assets include land at 140 lakhs. Ye 600 mein 140 hai, which should actually have been at 110. So that means 30 you have done upward revaluation. So shall I minus 30? फिर से एक बार read, spare more time in reading. The doing part will be easy. See, fixed assets include land, which is purchased at 110 and was revalued at 140. So in 600, 140 is included, whereas you want it at 110. So 30 is the upward revaluation which you should minus. Next, in other fixed assets are reflected which unit is transferred, they said N. Okay. Other fixed assets are reflected at 460. 600 means for the land. 600 minus जो land के लिए है 140. So other 460, which represents WDV of the asset 430. So other assets are for 460, but actually the WDV is 430. So which one you will take? WDV, that is 430. And unit N was started in October 2007. Oh, it started in October 2007 and right now it is 21-22. So obviously, whatever capital gain you are getting is long term. Anyone wants me to read, because when I go to solve it, then I cannot read word to word. Is interpretation clear? ये points में कहीं कोई googly तो नहीं है ना आपके लिए? Otherwise, check your watches, 7 minutes and 7 marks. That should be it for this. Problem number 7 in the notebooks now. Let us do it together. साथ में करते हैं. Problem number 7. Computation of capital gain under section 50B, that is your slum sale, and everything is in lags this time. So particulars and lags. Let us start. And which unit is transferred, we should write on top so that we don't take figures other than unit N. Now, fixed assets. Fixed assets are given 600, but in that land they have taken 140. You should take land how much? 110. Are you clear? Unit fixed assets, land they have taken 140, but you take 110 or you take 140 minus 30. Your wish. Other fixed assets, the book value is 460. Land ka 140 hai na, 600 minus 140. So 460 is the book value. But you take how much? They have given WDV 430. So we will take 430. This is about the fixed assets. Language is clear. Like we speak English, Gujarati, Telugu, there's a language of income tax. The more command you have on that, income tax becomes super easy. Land, you take it at the book value 110, not the revalued. and other assets book value is 460, you take the WDV because they are depreciable. What about other assets? Same. Other assets may be current assets and all. They are at 440. So all clear. Now what is the total of assets? I call it as A. 980. 980, I call it as A. Liabilities. Liabilities, only one item is there, that is 140. So what is the net worth? This time no mistakes, so no need to make working note 2. I wrote the heading computation, but my mistake that I started calculating the net worth. So now let us name it as working note 1 and again we'll make the computation. Frankly, in exam, do the computation, write the net worth as per working note 1 and then working note 1 follow. I did it wrong. Chalo. Land is 110, other assets 430, other fixed assets and other assets 480. Liability is only one item, 140, and so net worth is 740. Now, let us do the computation of slump sale. And let us start it. What did they give you the sale consideration? Yeah, it is 840. I did calculation mistake, 840. What is the sale consideration? Sale consideration is given to you in the first bullet point, 930 lakhs. Are there any expenses? No. So deduct the cost as nothing but net worth as per working note 1, that is 840. And why your long-term capital gain? Because this unit is held since 2007. So what is your long-term capital gain? 90 lakhs. Deemed dividend also very nice questions are asked. I'm going to do it now only. And related to that again the capital gain liquidation part also. Yes. Is this clear to all of you? Any one of you needs any explanation, please ask me. Fixed asset, other assets, so that gives total assets minus total liabilities, you get the net worth. Sale consideration minus the net worth is long-term capital gain. Done? So we have done with slump sale. If you have any doubt anywhere in any book, any problem, just bring it. Put it in our WhatsApp group, we'll surely clear it. Okay? Now, actually, deemed dividend is covered in inter only. But what capital gain liquidation part I want to take now, for that you need to know the deemed dividend. That's why deemed dividend concept also I have printed here, and then we will take up one more. Like slump sale only you have some problems. For the deemed dividend is also us, and deemed dividend is now very important because from last financial year all the dividends have become taxable now. All the dividends are taxable in income from other sources. Interim dividend, whenever it is received, is taxable. Final dividend, whenever it is declared, it is taxable. Deemed dividend, whenever it is received. I'll make you write if you want to write. And what is this concept of deemed dividend and how it affects the capital gain problem? So we are breaking into two parts. Capital gain and liquidation problem related to deemed dividend we'll take separately. First, let us understand the concept of the deemed dividend. Okay, right. Look at the screen. I'll explain in my way and it will be clear to all of you. Ye dekho. See. Now, just look at this position of company. Company's share capital is 100 rupees. And they made a net profit of 40. Now, when they make a net profit of 40, they will, net profit means after all your trading P&L, all debenture, interest, outsiders, subco you have paid. Now, 40 you have earned. Can you give the whole 40 to the shareholder? Answer is no. Whatever you want, do you spend? No. Everyone knows the concept of saving, and that's what helped us, and it was a blessing during the COVID times, we all know. So now, even if we earn 40 rupees, the profit which we distribute to the shareholder is called as dividend. Is the term clear? I'm not giving you grammatical definition, but simple logic. What is dividend? Out of the profit earned by company, whatever they distribute the profit to shareholder, it is called as dividend. So say company gave dividend 10. That means 30 rupees is the accumulated profit with the company. 30 rupees is the accumulated profit. In some technical books, it is also called as, what do you call it as, in some books, they call it, one second, accumulated, flowing back of the profit. Flowing back of your profit. And a time will come when you have such great reserves. Now you will start buying back your shares and paying off outsiders. Thank you so much, shareholder. When we needed money, you gave us. Now we have our own reserves. And this is how the companies expand. If we are earning 40, we will give dividend only 10, distribute the profit up to a limit. Remaining you put in so that you have one branch in Hyderabad, and then you open 10 branches across India, and then 2-3 branches across world. So you need money. So flowing back is putting the money again in the business, pumping in again in the business. This is a concept. Now, 100 rupees is the capital and 30 rupees is the accumulated profit. Again, next year net profit is 50 and they gave dividend 15 and 35 rupees. So my profit is 65. Now answer to me one question. Whom does this 65 rupees belong to? Shareholders. This is your hard-earned profit. But we don't have it with us right now in cash because this is invested. We have on asset side fixed asset, current asset. Pehle ek branch tha, now we have 4 branches in India across. So this profit is pumped in the business. But this belongs to whom, dear students? 65 rupees, shareholder. Now, anytime for any reason, if I distribute this money to shareholders, will it be dividend? Yes. But outrightly, I gave only 10 and 15 dividend. But remaining 30 and 35, whatever form I give to shareholder, is it dividend? Then it is called as deemed or assumed to be dividend, very well taxable in income from other sources. Nothing to write. You tell me whether the concept of deemed dividend, how deemed dividend is born, is clear or not? One line answer. Whatever is accumulated profit in the company that belongs to the shareholder, in whatever form it is distributed to shareholder. Okay, I am closing the company. Shareholders, take your 100 rupees, take your 65. Shareholders will say, ma'am, 100 rupees is the sale consideration for our shares. Company ne diya. 65 to deemed dividend, income from other sources. If I say to shareholder, listen shareholder, 65 is your reserve. I don't need it. I will give it to you in the form of bonus or some other way. I will give it to you in the form of some preference shares or some whatever way, in cash or in kind. Acha shareholder, listen, 65 rupees I have accumulated profit. Against that, I will give you loan. Your money, I'll give you as loan. Why you worry? This is in case of private company. I'm going to cover up all these points. In any form, when you give dividend to the, I will say accumulated profit to shareholders, it is called as deemed dividend. Now, deemed dividend is given to shareholders out of the accumulated profit in 5 different cases. So any case, whatever case you are caught up, it is income from other sources taxable. I repeat, earlier, there are 5 clauses in deemed dividend I'm teaching you now, but first 4 clauses were exempt in the hands of shareholder because company was paying CDT, DDT, 115 why not. Now no story. All the dividend is taxable in the hands of shareholders. So I'm reading out now What are the 5 cases when deemed dividend is given? Tomorrow also we are doing the same topic, and I'm an income tax teacher, but I'll try my best to justify this law-like topic. तो आप देखो समझ में आ रहा है नहीं, and when we solve one problem, for sure it will be very clear. I'm on page number 13, dear students. Yeah, this deemed dividend and liquidation concept is important. So related to this, if you have doubt, please put other doubts. I'm there. Till you have doubts, I will not close the meeting today. So live, you can ask me whatever doubts you have in return of income, MAT, trust, kuch bhi doubt hai to pucho. And preferably, if you can send the pictures when you see a conflicting print, no, send it, I can tell you. Chalo. Okay, see. Understanding is enough, I think, for deemed dividend, huh? Because they are not going to ask you, give 5 cases and write this as a short note. No, based on this, they will frame a case law. Someone got the dividend like this. 2 mark, 3 mark, beautiful small questions are asked. I have given those questions also here. 222 defines dividend to include any distribution by company to its shareholders. Bold, I have written, to the extent of the accumulated profit, 65 lakhs, whether realized or not, resulting in release of all or any part of the assets of the company. Shareholder, against your 65 lakhs accumulated profit, take this land, take this cash, take this asset. In any form, if I give the dividend, is it deemed dividend taxable? Answer is yes. So, out of accumulated profits, if you're giving to shareholders. Second, any distribution to shareholders by company of debenture, debenture stock, deposit, or distribution of bonus shares not to equity shareholders. Usme to koi, just reserves are reduced and capital is increased. Bonus shares to preference shareholders to the extent of accumulated profit, whether capitalized or not. So I am giving to shareholder out of accumulated profit either assets or debentures or bonus shares to preference shareholder. Underline the clue words. Or third, market, very important. Distribution by shareholders to the shareholders by company out of accumulated profit on liquidation to extent to which distribution is attributable to accumulated profits of the company, whether realized or not. Shareholder, we are closing the company. Take this 100 rupees your capital. Acha, take this 65 also. This is your accumulated profit. So in whatever form you give accumulated profit, in cash, in kind, non liquidation, it is treated as deemed dividend, taxable in income from other sources. Chalo. Any distribution by company to shareholders on account of reduction of the share capital to the extent to which company possesses accumulated profit. ये तैसे रट्टा मारने वाला prayer की तरह. But what do you mean by reduction of share capital? Dear students, you know, in accounts we have a topic called internal reconstruction, renovation of the house within that same balance sheet. Amalgamation and all is like external reconstruction. Internal reconstruction, capital reduction padte hai na? We make a scheme to revamp the company. So in that internal reconstruction scheme, can we give the reserves to the shareholders? Huh? Then that will also amount to deemed dividend. Last case, any payment to the extent of accumulated profit by a private company. All these points are applicable to all companies, public and private. I want you to write here. Applicable to all the companies, public and private, A to D. E is applicable only for private company. Now this E point is little different and some points and stories are there. In exam, nice questions are asked. So I'm explaining it in my way and then you see how you follow or not. Dekho. 2 22E clause, the fifth clause I'm discussing, dear students. And what this fifth clause is, it is applicable to private company. This is applicable to private company. Now what, private company, the transactions are quite close by. So first point over here, private company is giving loan or advances to shareholder holding more than 10% voting power. More than 10% voting power in the company, substantial interest, more than 20% profit, and partnership firm, substantial interest. So what is happening? Private company is giving loan or advance to shareholder holding more than 10% voting right out of accumulated profit. I am teaching little more in detail the fifth clause because very beautiful questions are asked and they are like super scoring. When I solve, you say, ma'am, question 5 line ka and answer is 2 line. Professional exams, no correlation between length and marks. I hope you know. 1 second, this reminds me, long back in the CMA final, I think my 2-3 years back ka batch, the ones they asked, write a short note on reference to valuation officer under section 55. ऐसे दे दिया exam. Write a short note on reference to valuation officer under section 55A. This is a question of capital gain, and in 55A you can refer to valuation officer. This is other than 50C stamp duty. Only 3 points are there. When your value is book value, say your market value is more than 110% or more than 25,000. Or if you feel required, 3 points and 5 marks. So will you create 2 more points and write, dear students? Please no. Write 3 points. It's like law, no? Anyone says income tax is a practical subject, I say no, it is the next corporate law. And as a teacher, law is not my subject. After I qualified in 2000, I've never taught law. But deemed dividend, it's a part of tax I'm teaching. Now feedback you have to give me whether it. So is this smallest point clear or not? Whatever is the need, no? You see the answers of deemed dividend questions, you will be surprised. Chalo. Coming back to our notebook, what did I say? What did I say, dear students? 222E clause is applicable to private company. Loan or advances given to shareholders holding more than 40% out of accumulated profit. It is treated as DD. I'm writing DD, deemed dividend. Acha hai, clear hai? Huh? Now, second, loan or advance given to partnership firm or AOP or any person where beneficiary is shareholder. Look at the diagram. Okay, private company will give the loan to a partnership firm where 80% partnership ka share to our shareholder hi hai. So indirectly you are giving accumulated profit to shareholder. But ma'am, it is in the form of loan. Doesn't matter. Why did you give out of accumulated profit any benefit to the shareholder? It amounts to treated as deemed dividend. Third point. Even if loan is repaid, come se come 3 times they have asked this question. Okay, private company gave loan and advance to the shareholder and shareholder repaid along with interest. Ma'am, now why you are treating it as deemed dividend? No. Even if loan is repaid with interest, it is taxable as deemed dividend. Please, I am ignoring grammar. वो सब लिखने के चक्कर में the concept loses. If you put dash in grammar, you will understand. If loan is repaid with interest, still it is taxable as dividend. Fourth is beautiful. Exception. I don't know what you write exception. ASS थोड़ी लिखते हैं. Grammar English तो इतना खराब है. Exception. If loan given as trade advance You know, sometimes we give a trade advance. We have given to shareholder loan as trade advance because he's going to buy something for us. He's like our commission agent and he's holding the share also. So what? So if we have given a trade advance which is customary or A bit or isme B bit, if loan giving is nature of private company, all this story is for private company. This is all actually done in inter. सीधा liquidation अगर मैं करूँ ना तो आपको नहीं समझेगा. So half an hour I am sparing for deemed dividend. So please understand one point. If loan is given as trade advance or if loan is given in the nature of the private company business, you know, finance का काम ही है. Private companies business is only funding people. Chit fund, finance company, bank like they work, and then they are giving loan in routine. Then not taxable as deemed dividend. This is my own made notes in front of you, but surely it will help you to get the liquidation next question, which we will do after 10 minutes. I'll give you time to write, and if you want, I'll dictate also. Quickly write. But first, you have any doubt in the concept? Ye dekho. Loan or advance given to shareholder holding 10% voting right out of the accumulated profits treated as deemed dividend. Loan or advance given to third party where beneficiary is shareholder treated as deemed dividend. Ma'am, loan is repaid with interest. Now to don't treat as deemed dividend. Only exception if loan given is trade advance or if giving the loan is customary, like their business is finance. Now, as you say, you want to write down or you want me to read? This is all there in the material also. As you say, you want, then I will wait for 2 minutes, or you want me to read and go on to the problem then? चलो, read the bit over here. यहाँ से पढ़ते हैं इसको. Yeah. See. Please come back to the first one. थोड़ा flow में आ जाएंगे. Any company is distributing to shareholder out of accumulated profits any part of the assets. Number one, debentures or bonus shares to preference shareholders. Number two, any amount out of accumulated profit is given to shareholder on liquidation. Number three, reduction of the share capital, internal reconstruction scheme. Number four, any payment to the extent of accumulated profit by private company, which is also called as company in which public is not substantially interested. Loan or advance to shareholder who holds beneficial equity shares not less than 10% of the voting power. Loan or advance to any concern, third party, HUF firm, AOP, BOI, in which shareholder is a member or partner, 20% se zyada share, or any payment on behalf or individual to third parties. Exception, any advance or loan to shareholder concerned with shareholder has substantial interest will not be treated as deemed dividend if loan is given during the normal course of the business. Lending the money is their business. Where loan has been treated as dividend, I have not explained this point. Read it and then I'll explain. Okay. We, the private company, dear students, gave you loan and it is treated as dividend. Subsequently, the company declares and distributes dividend to shareholders, including you shareholder, and dividend so paid is set off by the company against borrowing. Adjusted amount will not be taxable again as dividend. We gave you loan, rupees 10, treated as deemed dividend. Then we gave you dividend, 15 rupees. And we said, listen, that loan don't repay us, keep it, adjust it with the dividend, and we'll give you dividend in cash only 5 rupees. So now again it will be taxable, not taxable, simple interpretation. Because the very first time only you have taxed it. Is my speed more? Tell me, dear students, if this is offline, no? Today only I said all of you have done homework. All CMA students, more than 60 students were there in class. Yes, ma'am. Okay, answer they shared. Then I said, did you write this note? Yes, ma'am. I said, read out, and that student had not done only. How did you come to know? तो face पे ना एक screen चलती है students की. And that I can, you know, respond so well if I can see all your faces, which I'm missing now. So now you have to keep the chat box active, or you can unmute. अगर नहीं type करना है तो no problem. Is this second bit clear, that when I gave you loan, if it is treated as deemed dividend, later on I said, oh, keep this deemed dividend. Don't return it back to me. I'm anyways giving dividend to all the shareholders. Will it again be taxable? World income is not taxed twice. Residential status se lekar, why this will be taxed? Any payment made by company on purchase of its own shares from shareholder in accordance with section 67 shall not be regarded as dividend. Such buyback, वो तो buyback होगा और हम सीखेंगे. If time permits, I'll tell you. Small concept is there for buyback, if not tomorrow. चलो. Any distribution of shares pursuant to a demerger to shareholders of the company in demerger, it shall not be treated as dividend. No, when you split the companies and you divide, it's not a deemed dividend. So buyback and demerger, not a deemed dividend, not a deemed dividend. This is called as 3D makeup. What I am writing, what you are underlining. See, notes have to be sufficient. Self-reading should be clear. But if you understand, next time you need not read all this story. Clear? Sure. Next. Whether there's a declaration of dividend or distribution, the nature of dividend, shareholder is chargeable to tax. Deduction for interest paid relating to dividend is allowed up to 20% of the dividend received. So many times, dear students, what happened? I have taken rupees 1 lakh loan and I have invested, I have taken at the rate of 10,000 interest, 10%, and I have put in the share market and I got dividend. Kitna? Say 8,000. Now, ये बहुत important है, income from other sources. Now you all are matured. If I link all 5 heads also, you will understand. Dividend received is how much? 8,000. But ma'am, related to this, I have paid interest 10,000. Can I deduct and show loss? Answer is no. How much deduction is allowed of interest? Maximum 20% of the dividend. That is up to 1,600 only interest will be deductible. Can you please write it? Just please write it. No, there's some need for me to. Okay, listen all of you. The points which I am explaining, there are, see, like this is an amendment of last year. Of course, this year's amendments are important and I have sent you today only in our WhatsApp group all the videos of the amendments. But this is also very important. This is last year's, काफी सारे last year के amendment also they will ask, because that is also recent, no? So just listen to this. You have taken loan of 1 lakh rupees and paid 10% interest, 10,000. You invested in the company and you just received dividend 8,000. Normally the students feel out of 8,000 I can deduct 10,000 and I can show a loss of 2,000. That is old story. Now whatever dividend you receive, only 20% is allowed to be deducted. So how much will be the taxable dividend, dear students? 6,400. I want all of you to scribble this where this point is written in your material. Isko padho. Yeah, put your phones on mute, please. If you have a doubt, unmute and ask. Absolutely, no problem. Or put it in chat box. If not, then put it on mute. Finish writing. And so beautiful point, no deduction is allowed from the deemed dividend or any dividend for the bank charges. Ma'am, for earning all these companies dividend, I have paid bank charges. No, not allowed. Acha, this is not clear. We'll write it in the notebook. This point I'll explain in the notebook if it is not clear. First, you tell me, is deemed dividend clear? 5 clauses of deemed dividend says, whatever way you give accumulated profits to shareholders. That deduction wala I'll clear. Whatever profit you give to shareholders out of the accumulated profit, whatever form, you give asset, you give cash, you give liquidation pay, internal reconstruction, or you give loan in case of private company, it is treated as deemed dividend and taxable. Are the 5 bits clear to you? Huh? Only exception not taxable is if loan given is customary. Okay? Yeah. All the deemed dividend as taxable in income from other sources. Now for deduction, I am writing in the notebook, and if you want, you can also write the example. Yeah. Please write down example. Heading likho. Heading ka first point likho. All dividend taxable note. This is like a booster note. So I am dictating, start writing with me. I am saying, listen and write if my writing is not clear. Screen dikh raha hai sabko? All dividend is taxable in income from other sources. Now, answer is when. So, first of all, interim dividend. When received. Interim dividend when received. Final dividend. You know how when the final dividend is declared after the financial year, books of accounts are approved in the AGM and they declare a record date, and that day they give all that you study in law. So final dividend when declared by company. Within declared 1 month they pay. So as in how it is received. Deemed dividend when received. Whenever you receive deemed dividend, it is taxable. Any doubt in writing this first point? No? Chalo. Next, I want to work out very nice problems of liquidation. At least one I should start today, so that you all understand, and then we can continue this. ठीक है चलो. All dividend is taxable. This is clear. Now write down. From dividend, interest expense allowed up to 20% of dividend received. This is a rule. They started from last year. Otherwise, people were showing losses in income from other sources also. From dividend, interest expenses allowed up to 20% of dividend received. Third, bank charges are not allowed. Bank charges are not allowed. Now, write down fourth point. Example. Rupees 1 lakh loan taken at the rate of 10% to invest in shares. To invest in shares, on which dividend received. Dividend is always received on face value. Suppose you have purchased the shares on face value. 1 lakh loan you have taken at the rate of 10% to invest in shares, on which dividend is received at the rate of 8%. Now, what is dividend received? 1 lakh you have put in share market, no? 8%. Just saying that it is all face value. 8,000. Now, less interest paid. How much interest? It's as good as 3-mark problem. How much interest you all have paid, dear students? 1 lakh into 10%. That is 10,000. Or this is A bit, B bit. 8,000 dividend ka 20% is 1,600. Whichever is lower. Ma'am, interest paid is 10,000. But how much interest you can deduct? Maximum dividend received ka 20%. And dividend received is 8,000. 20% is 1,600. And so what will be the taxable dividend? In income from other sources, 6,400. As you all want to become CMA, no? I became a CA in the year 2000. What do you think? Can I create options like this and become an author very soon? Can I publish my book? Challenging task it is, because income tax is ever changing. I teach costing also for Inter. Done means done. Much changes are not there. 10-20% according to the trends and all. Just sharing my goal with you all. Thank you for the wishes. Write it and ask me if you have any doubt. And think as if the most important part of income from other sources we have covered. PPF, interest, board, sitting fees, this, that, you know it now all. You can watch the revision videos also. Thank you. Yes, ask any doubt related to this, because I have to solve the problem. एक तो करना है, deemed dividend का जो impact होता है ना, how it is that you should know. And I want to give some homeworks also. In your own language, whatever best you can write answers so that you enjoy. When I discuss, and students give the correct answer, no, they have a different kind of confidence, and that's so beautiful for your final exam. As a teacher, we are pushing you now, but we are not going to stand beside you, in final exam. If I give some homework and I say, just write the answer in your notebook, half page waste karo, thoda ink waste karo, but do it. Sure. Any other topic you have doubt? Once we finish this, I will wait. Chalo. So now deemed dividend is clear. 5 clauses. Out of accumulated profit, whatever profit you give, that is routine dividend. Just as they said, final dividend, or some companies, they give interim in between dividend. Now what did I say? That out of accumulated profit, indirectly, it is going to shareholder in the form of cash, some agricultural land, some this, some that, internal reconstruction, loan ke form mein. Anyhow, in 5 clauses, out of the accumulated profit, going to the shareholder, this is deemed, assumed to be dividend, taxable in income from other sources. Maximum deduction allowed is 20% of dividend received. Finish. Clear? Now, with this, let us solve liquidation problems. Related to deemed dividend, some more concept is there, but I want all of you to do these problems as homework. Just comment and write below whatever you feel the correct answer is. 13, 14, 15 and 16. Very simple one-liner answers are there, but write it. And if you want, literally copy the language from the book for 1 or 2 and then write it. Hard work, smart work, jo bolo karke aana hai notebook. Till 16th you do, and then I will come. Okay, last part for today I'm taking right now is your liquidation. Look at the screen now. When the company goes into liquidation, what happens? We start, this liquidation is there in accounts also. We start selling all the assets and we start paying off outsiders and mortgage and then debenture holders and then preference shareholders and remaining amount to the equity shareholders. Now, while paying the equity shareholders, if you pay them accumulated profit, don't take it as a part of your sale consideration. So flowchart say we can go to the problem. I don't want to read the flowchart. I don't want to read these steps, which are actually very beautiful. Directly, I am taking problem number 20. You solve the question, and in that question only I will explain the concept of this liquidation. I don't know if some of the books are giving this in chapter 1 also, assessment of companies ki tarah, or here, wherever they give, पढ़ लेना है बस इसको. This is very nice. Section 46, distribution of the assets by the company in case of liquidation. Okay, right. Read the question, interpret and solve it with me. Then I will go back and read all these points. They'll be very clear. Mrs. Veena purchased 1,000 equity shares of Meena Private Limited in 2014, February, for 1,20,000. So when they say February 14, it is which financial year? 13-14. Indexation agar karna hai to, because it's a private company. Listed shares, no indexation. Now, the company was wound up on 31st July 21. Following is the summarized balance sheet. 6,000 equity shares are there. Out of that, Veena ke paas kitne hai? 1,000. So what is the share? 1/6. General reserves are there. Provision for taxation you have done. Agricultural land is there and cash is there. Now, the tax liability was not to, this is not needed for distribution name because DDT is not there, but just any tax liability can be there, no? So just the tax liability was a certain 3 lakh. Now, dear students, you made, read the problem. 5 minutes और लगने दो, problem ध्यान से पढ़ो. Provision for taxation you made how much? 250. And how much tax you have to pay? 3 lakh. Okay. Provision for taxation you have made 250, but tax is 3 lakh. So now what you will do? 50,000 what you have to pay extra. Can you withdraw from reserves? I hope this journal entry is clear to all of you. Provision for taxation debit, reserve debit to cash, और उतना cash कम कर देंगे. Because while closing the liquidation, the first part is to pay the government dues. After considering refund, the remaining assets were distributed to shareholders in the proportion of their shareholding. Market value of this 6 acres of the land is 10 lakh per acre. Forget about the book value. In liquidation, we always take the fair market value, 60 lakhs. Agricultural land received above was sold by Veena. So, you know, company said, oh, we are going into liquidation. Against your 1,000 share, we will give you whatever we have, uska 1/6. Okay. So for shareholder, whether they sell to other friends or whether they sell to company, for them to it is capital gain, no? Transfers definition in the capital gain chapter. Now, agricultural land received was sold by Veena for 15 lakhs. She received in July and she sold in February. So short-term capital gain within 1 year if you sell the land, okay. So it will be short-term capital gain and nothing given, we'll take it as urban agricultural land. Rural, though it's not taxable. Discuss the tax consequence in the hands of company and Mrs. Veena. Dear students, please tell me honestly if this is clear or not. Reading the problem is clear or not. I am saying to Veena, Veena, we are closing now. So against this, take your 1/6 share. And in the capital, you have 1/6 share. In general reserve, what you have 1/6 share, that is deemed dividend. For this, I taught you deemed dividend more than half an hour. General reserve are accumulated profit distributed to shareholders on liquidation under section 222 clause C. They are deemed or assumed to be dividend. Okay, very easy problem. And dear students, for indexation, they'll give you the limited rates, but here on one page, I have given the full table here. So use these CII rates. In exam, surely they will give you all this very clearly. Okay. So right now we are in problem number 20 in your notebooks. Section 46 we are doing. They are asking you taxability for the company and for the shareholder. So section 46 is the heading. Distribution of assets by company on liquidation. This is the heading. Now, first, A bit. Taxability for company. A company transferring assets to shareholders on liquidation. Company transferring asset to shareholders. This is answer, huh? Write down. What is the taxability for company? Then a company transferring assets to shareholders on liquidation is exempt transfer under section 46-47 of the capital gain chapter. Is this clear to you? Listen, I'll tell you the interpretation. Company is giving assets, land or cash and all to the shareholder. Is it a transfer for company? Answer is yes. But you remember in capital gains chapter, after the transfers definition, sale, relinquishment, there's a big list. Transfer of asset, holding to subsidiary, transfer of asset. In case of liquidation, if you transfer the assets to shareholders, this transfer is exempt for company. So for company, no tax. No tax for company. Now coming to shareholder. Is my speed fine and clear? Taxability for shareholder. Taxability for shareholder. अब क्या करना है? Shareholder. Shareholders are saying, ma'am, if we sell it to others, no, there's capital gain. If we sell it, like this is not selling back to the company, but this is like transferring, cancelling our shares with the company, no? So are your rights getting extinguished? Then today watch my capital gain revision video. I have told over there very clearly, extinguishment of right is also a transfer. One very beautiful example, 2 minutes. If I sold plant and machinery to Sandeep, so WDV pe jo bhi block of asset, short-term capital gain I have to pay. If I have transferred my depreciable asset to Sandeep, I have to pay tax. Second option, my plant and machinery is destroyed in fire. I didn't sell it, but it destroyed in fire and insurance company gave me money. It was 100% insured. Is my right extinguished in that plant and machinery? Khatam ho gaya mera right because it's into ashes now. Extinguishment of right is also transfer. Shareholders are saying, we have not sold the asset to an outsider, but because the company went into liquidation, no, our right got extinguished. So what will be the taxability for the shareholder? What will be the taxability for the shareholder? Routine capital gain tax. Now divide it into two parts and let us take the sale consideration. Who is the transferee? Miss Veena. How much share? 1/6 share. So first, she's getting agricultural land. Agricultural land, 6 acres into 10 lakhs, market value 60 lakh. फिर 1/6 of that. So 10 lakh only. All this is giving trouble. 1 second. Huh? Some other screens are open. So agricultural land calculation is clear. 60 lakhs market value, 1/6, 1,000 out of 6,000 share, 10 lakh is ours. Now come to cash. Cash was 6,50,000, but we have already paid the tax liability 3 lakh. So how much cash is coming? 350. Of that, 1/6. Quick. 350 divided by 1/6. 58,333. So total sale consideration 10,58,333. 10,58,333. This is the amount received from the company. Agricultural land 1/6, cash ka 1/6. But out of this, whatever is deemed dividend under section 222E C, sorry, it will be taxable under income from other sources now. So remove it from the sale consideration. I have sold you the shares of 1 lakh and 10,000 I gave you dividend. So sale consideration is only 1 lakh. No, come dividend thodi loge aap. Now, how much is accumulated profit? Look at the screen, dear students. General reserve is 40 lakhs. Minus for tax, you have used 50,000. Why 50? Because 250 you made provision and 3 lakhs you paid. So 50,000 you will use from general reserve. So what is general reserve? 39,50,000. Is this distributed to shareholders? 3950 accumulated profit? Yes. And of this 1/6 share. 3950 divided by 1/6. 6,58,333. I will do similar 2 more problems tomorrow in class. Don't worry. But if you start and read it within 24 hours, no, the grip will be more tomorrow. Company gave me 10,58,000 against, see, I'm giving, take 1058 against your shares and accumulated profit. But ma'am, what is coming against accumulated profit is taxable as deemed dividend income from other sources. So remove it. 10,58,333 minus 658,333. So that comes to how much? 4 lakh is the actual sale consideration for shares. Anyone in the class who has just copied and not followed, ask me. Just 2 more minutes to complete this problem. But yahan tak koi doubt hai to pucho. Give some message, all clear or not? Land 1/6, cash 1/6. Take it, bye-bye. But when I got that 1058, out of 1058, I got 658 as accumulated profit. Remaining I got as my capital. So what I got as my capital is a part of sale consideration. Now the problem will continue down. From the sale consideration, you have to generally deduct cost of acquisition if they are listed shares. But these are like private company shares. So we will take index cost of acquisition as shares are of private company. I repeat, if this would have been a listed company, we would have directly deduct the cost, because in listed company where STT is paid, no indexation is there. Chalo. Now, what is the cost of the acquisition, dear students? Shares were acquired in 13 and 14, 28th February 14 for 1,20,000. And now they have been transferred in 21-22. So 21-22 index is 317. We all know. 13-14 check in table now. And in exam, they will give you. With a capital gain question, surely they will give you all. Quick. What is the rate for 13 and 14? 220 CIIs, cost inflation index. What was available in 220 in 13-14 is available now in 317. So what about something available in 120? How much it will be? 120 into 317 divided by 220. 120 into 317 divide by 220. How much cost I will deduct? How much is it coming? 1,72,909. Final tax is rounded off in the multiples of 10. 4 lakh minus 172,909. 227,091 is your long-term capital gain. Sale consideration is 4 lakh minus index cost of acquisition. If there is improvement, you take the improvement also. Shares में तो नहीं होता है, but और किसी में. 228,091 is the long-term capital gain. Now, immediately after purchasing the agricultural land, it is sold for 15 lakhs. You got the land in how much? 10 lakhs. And then you sold it. Short-term capital gain on land. You sold it in 15 lakhs. You got it in 10 lakhs. 5 lakh is taxable. Long-term capital gain 227. Short-term capital gain 5 lakh. And income from other sources deemed dividend under section 222C. Sale consideration में से तो you have deducted. But is that taxable in income from other sources? Answer is yes. 658,333. So what is the total income for her? 227,091 plus quick, you can do faster than me and send the answer in chat box. 13,87,424 rounded off, under section 288 and 288B, income and taxes are to be rounded off in the multiples of 10. 8 marks problem. We have done it in 15 minutes with lot of explanation in exam. Surely you'll be able to do it in 7 minutes. And amalgamation, demerger, of course, it's a part of syllabus I'll teach you, but itne aate nahi uske problems. These are only asked. At least 5-6 problems you see in scanner for slump sale and this. Shall I explain once before we close and before I give homework? Yeah. What happened in this problem is company transferred the shares to the shareholders along with accumulated profit on liquidation. So company need not pay any tax because company has transferred asset on liquidation and that transfer is exempt. Now coming to shareholder, what did they get for sale consideration? 1/6 of land and 1/6 of cash after paying the tax. But whatever they got, in that they got payment for their capital as well as accumulated profit. So what they got for accumulated profit is against general reserve. General reserve is 40 lakhs, but 50,000, which was short in provision, we would obviously deduct from here, no? So remaining general reserve 1/6 they gave. Now actual sale consideration is 4 lakh. And now indexation, you do it because these are private company shares. Had it been a listed company, directly you can deduct the cost and you can get capital gain. Now, this agricultural land just you purchased in July for 10 lakhs and you sold it for 15 lakhs. So short-term capital gain, assuming these are all urban agricultural land. Income from other sources may deemed dividend will be taxable and you get the total income for the company. अलग आ रहा है, total में कहीं mistake है. 1385. I've written 87. 1 second, we will check it up. All of you should do the total ना. पूरी class गलत करती है, आप अकेले सही करते हो. अरे, this is mindset, so that in exam तो you have to do total also so quickly in the 3 hours. 1385. Yeah. 1385. That's all for today. Acha, one second. Huh? Homework karna hai na? Now look at this. Flowchart. Capital gain on distribution of companies in liquidation. In the hands of the company, distribution is not a transfer, it's exempt. In the hands of shareholder, distribution which is accumulated to accumulated profit, deemed dividend, taxable, and income from other sources. Now, whatever money received or fair market value of asset received minus deemed dividend, remaining is the full value of the consideration subject to capital gain. Okay, chalo. When assets are transferred by way of distribution to the shareholders of company on account of liquidation, such distribution shall not be regarded as transfer in case of company. That's what I made you write. It's not taxable for company. In case of shareholder, capital gain shall be chargeable to tax. For the purpose of capital gain, consideration shall be determined. Distribution is cash, amount received minus deemed dividend. Distribution in kind, fair market value of asset received minus deemed dividend. Deemed dividend is not a part of sale consideration, so we are removing. Now, total value received is fair market value of the asset received plus amount received in cash. Calculate shareholders' interest in the deemed dividend. That's what I did 1/6 in that. Consideration for transfer is A minus B. You receive total, but out of that, whatever is deemed dividend, you minus. So you get sale consideration minus the cost of acquisition, you get the capital gain. If shareholders transfer the asset subsequently, it will be taxable in the hands of shareholder. How? Net sale consideration minus the fair market value, what you get. See, one dialogue. Students, if they don't understand, they ask like this silly doubt. Pata nahi aapne to nahi pucha, but kuch student पूछते हैं. Ma'am, here 10 lakh is the sale consideration. Is that same 10 lakh cost? Answer is yes. 10 lakh is the sale consideration I got from company, fair market value. Now when I'm transferring it to my customer, what will be the cost for me? Jitne mein you gave me 10 lakh. Got it or not? Listen, this is the concept in section 45A also in capital gain. I have given my property for redevelopment. Builder is building flats. 6 flat he is keeping, 4 flat he is giving me. So market value of the 4 flat is the sale consideration for me. And now these 4 flats, when I sell it, this fair market value will become the cost. If you have not understood my example, no problem. This is there in the flow chart, in the inter videos. Padho ek baar. Right. Now, anyone is having any doubt in this topic, deemed dividend and liquidation? If not, one question at least you will do it on your own. Same. Private company, exactly same. I will not do it. मैम बोलते हैं होमवर्क फिर पूरा क्लास में करते हैं, मैम के साथ कर लोगे तो कॉन्फिडेंस कैसे आएगा? Who has learned driving by their father and parents holding the hand always? They don't even know and they leave you and then you are driving on your own. So drive your income tax vehicle on your own. Raghav purchased 10,000 equity shares out of 60, same 1/6. Sale consideration is given and it's a private company, so indexation bhi lagega. Agricultural land, cash, same. Assets after discharging the liability for the income tax is distributed. Out of cash, you pay the liability. This time, liability is not less and more. Out of cash, you pay the liability, remaining 1/6 you give to shareholder. Agricultural land, 1/6 you give. And out of general reserve, 1/6 is the share of accumulated profit. Exactly same problem. What I did now, you do it. Same liquidation, this buyback, nice questions these all are. We will continue tomorrow. That's all for today. Let this chapter take 3 classes. I don't have a target ki kal hum isko khatam karenge ya parson, but because this is a slump sale and liquidation I have covered, Deemed dividend I have covered, but questions I have not covered. So the class will start with revision of deemed dividend and homework, liquidation and homework, and then we will go to the next topic in this. Private company converting like this. So we will continue, do the homework at best.